going to be joined now by our next feature speaker. It's one of our favorite guests to have on, Anthony Milewski. He is chairman of Nickel 28 Capital, but I'll let Adrian tell you a little bit more about him. Adrian Pocobelli began working at the Northern Miner back in 2012. He started as the online editor of the Northern Miner website, and he is now the hostess with the mostest for the Northern Miner podcast. He lives in Berlin, Germany, and he is joining us from there. Adrian, how's Berlin these days? How are you keeping?
It's pretty good, and it's great to hear your voice and great to talk to you, Anthony. With all this long distance, it's great to just see you. It's interesting. It's almost going back into, it's not quite lockdown, but the numbers are going through the roof with coronavirus out here in Berlin. And what's so interesting is it's like everybody's still living their normal lives, but a year ago it was half this bad, or whenever that was, maybe in March, and everybody was freaking out. So it's interesting, and I'm just sort of doing my own little private lockdown, but not really, but you know what I'm saying? Not going out too much, you know?
Yeah, changing group psychologies, I think, the longer this goes on. No, absolutely. And we have been following what's going on in Europe. I saw that Munich had to close its Christmas fair. So yeah, we hope you're staying safe over there. You had a great conversation with Anthony Milewski early in the year at a previous mining symposium. So we thought it would be a great opportunity for the two of you to reconnect. So I will get out of the way and allow you two to do that. Cheers.
Great. Thank you, Anthony. And hi, Anthony. Anthony number two.
Hey, how are you doing?
I'm doing wonderful. It's good to talk to you again. And it's funny. I was just looking at your bio. It's pretty impressive. I'm just going to go over just a couple of things here, just so everybody knows exactly who you are. And like what I like about talking to you, it's one of the bread and butter. So the bread and butter of the Northern Miner, to me, part of it is the small penny stock or the junior mining stock investors. I mean, we have another group of people who are the geologists and the scientists. But so anyway, so it's great to have you on and talk about commodities and whatever. And I just want to just mention, so Anthony is the chairman of Nickel 28, and he has been active in commodities related to decarbonization and energy transition, including nickel, cobalt, copper, and carbon credits. And he has served on the LME Cobalt Committee. He has worked at Renaissance Capital and several other places, which I won't go into. And he is also a Fulbright scholar. And he also holds a BA in Russian history and an MA in Russian and Central Studies. So I did want to mention this to whet everybody's appetite for the conversation we're going to have. So Anthony, where are we talking to you from? You're in London, right?
Yeah, outside of London. I live, 45 minutes outside of London.
Okay, excellent. So as we think about investing today, and how do you see, say, investing in commodities today? What is your framework for just approaching this? Do you go from, well, they're undervalued? Like, how do you approach the market?
Yeah, I mean, it's a challenging market right now. And I think it's driven by momentum and fund flows. And so it's really hard to own anything. You got to rent it. And that's unfortunate because, of course, it takes, 5 to 7 years to build a mine. But I think you just have to be practical if you're investing money right now that if gold starts to move, you got to get in there. Maybe you miss the first 10%, but you catch the next 60, and then you got to get out. We're living in an environment where government policy, as much as anything, and government liquidity flows are driving global capital markets. And so it's challenging to buy something and hold it and sit on it. And I think that's a fundamental paradigm shift from value investing that we all have talked about.
Absolutely. In a sense, we're all being forced to be a bit more active in the market. Again, like you say, this whole buy and hold strategy, I guess it's worked for the S&P, but it has definitely not worked for commodities. I mean, if you own gold.
But the S&P is just a proxy for liquidity. If you take, that is, by the way, ultimately the best investment for the average person is buying the S&P 500 and reinvesting the dividends. But if you actually overlay the US dollar liquidity with the S&P, and you pick any period, longer than 6 months, you find a pretty binary correlation. And so I think that's a great strategy. But for people who want to add some alpha and excitement, of course, commodities is always there. And we're also entering a period of maybe the most significant inflationary environment we've seen since the 70s, and we've just gotten started. And so, historically, all commodities have been a great spot to be, but in particular, oil and gold.
Well, that definitely has been the theme of the year, I think, is other than crypto. But I mean, inflation, the deflation, inflation debate has definitely been the theme of the year. So, I was walking to the grocery store yesterday and I was thinking like, inflation, deflation, the answer is yes. Like, I kind of see us having where we could have both, like where we get the period of inflation and then when they start to tighten, we're going to get a period of deflation. But how do you see the whole inflation deflation situation?
Yeah, maybe we have stagflation. I mean, maybe, but I think if you took a 15-year period, you would definitely say that we're living in a deflationary environment. And what that means for the listeners who are thinking about investing is that means that technology is going to create deflationary pressures. Probably certain jobs disappear. But that story is a much longer story, and that's a tech story, really, if you think about it. But certainly in the coming months and I think years, we have to have that money go somewhere. And if you think about why is the S&P reaching all-time highs and why is this happening, it's because governments, not just in America but everywhere, have printed money. And if you think about the U.S. dollar, something like 30% or maybe even more now, 35% of all U.S. dollars ever printed have been printed in the last 18, 24 months. And so that excess liquidity has to go somewhere. And it's gone in America, it's gone into housing prices, it's gone into the cost of your food, it's gone into the stock market. And so I don't see that a lot of these prices are ever coming down. And now, we're having this moment where as many as 5 million Americans haven't re-entered the workforce because they've retired or decided they didn't like their job, creating pretty material pressure on just labor and wages. So this isn't going away, and it's highly relevant, I think, to what we want to talk about, which are commodities, because that means that there are definitely going to be big winners in these commodities. And it's interesting, notwithstanding that point, like let's talk about what's the brand new nickel mine being built or copper mine. I mean, there aren't any big projects being built out there, and so on the one hand, you're going to have this demand pressure. Another hand, you're going to have like a pressure from just inflationary environment with monetary policy. And then you're going to have this kind of third leg to this, which is going to be that no real material supply, in particular in base metals, has been built out maybe in more than a decade. And who's going to build those mines? Notwithstanding capital, like where is the intellectual capital to build the mine? So it could be a really interesting go here. But I would say, one thing I do disagree with is this notion of a super cycle. The experience with China was extremely unique, bringing billions of people through an industrial revolution. Instead, I think what you're going to see here are specific commodities are going to really have their moment for different reasons. And so I don't know that you're buying a basket. I think you have to kind of take a view on specific commodities based on certain fact patterns that are relevant to that commodity, as opposed to just saying, I'm going to buy the basket.
Well, and that's exactly where I want to go with this, which is which commodities are you looking at? Which are your favorite? And then I want to go later in the conversation to maybe issues we have with the West and, developing a nickel mine, how difficult that is. But what are you looking at for commodities right now? What kind of excites you, if anything?
Yes, I mean, look, just as a trade, I like uranium as a trade. I think, though, you've got to be nimble and you've got to be ready to abandon ship, because the uranium move, notwithstanding the longer macro view around decarbonization, because uranium and nuclear power is critical. But in the short term, you have Sprott buying physical uranium, sucking up supply. So you have a financial demand, which can act as a bridge to a physical demand. But if that physical demand, i.e., utilities buying uranium, doesn't come in, the thing's going to roll over hard. I'm not predicting that that's happening anytime soon, because in fact, physical demand could come in. But between now and that moment, I think this is a fantastic trade. So, as a trade, you got to be top of the uranium trade just because of that ability for it to roll over quickly. But I think that's interesting. I really remain bullish on copper and nickel just because of decarbonization. And the one I want to like, although I hate to say it, I really want to like gold equities. And the reason I want to like them is because every other commodity has had its moment in the last kind of year or two. And gold really, even at 1900, hasn't had that. And so, a part of me wants to own that, but I don't have any particular thesis other than liquidity finding a home. So, base metals are really driven by some fundamentals, I think, and uranium potentially by fundamentals, but certainly just by, financial engineering. And then gold, it just feels like gold is going to get a moment.
I know exactly what you mean, and I agree with you. And it's sort of like you were saying earlier, like maybe the best way strategically to approach this is you wait for the 10% breakout, or you wait for the bit of momentum to come in, and then you come in. Because otherwise, I mean, if you had bought, gold equities, I was looking at Agnico Eagle in our last podcast there. It was the same price I told my mom to buy it in 2012, and it was $72, and
which comes back to this sector. I mean, maybe we have to be realistic. So, if you look at the financial crisis over a decade now, I was at a hedge fund, back then, and what you had was a scenario where these hedge funds could own the liquid positions, and it didn't matter as much. But after the GFC, the global financial crisis, what happened was the documents completely changed inside of hedge funds. And so they were mandated by their documents as to like what percentage of their overall AUM could actually be in relatively illiquid positions. Now, if you fast forward over a decade later, what you have now are these tremendous pools of capital that are entirely focused on liquidity. Point72, Citadel, like the guys aren't even trading, right? Like they put forward their positions, and then a master risk algorithm like allows them to come in or out based on market dynamics, and then they're charged internally based on how liquid the stock is, among other things. So you have this whole rush of liquidity flowing around the market, and maybe in the world we live in, if you want to be cynical, you just can't buy and hold these stocks. So you've got to trade them, and maybe that's where we've arrived, and ultimately that paves the path for the next bull market. Because if it's all fast money and no one is sort of putting up the money to really do the exploration besides retail and really build and develop these mines, it's setting the stage for the next bull market, whenever that might be. But if you're talking really just directly to people investing their own money, I think it probably means you got to rent these things and be real cautious about saying, I'm going to own this thing for 3 or 4 years.
It's so interesting. I think it speaks to our current time. To me, it feels like a bit of a speculative mania, frankly, is going on across society. Whether whether you're in real estate, stocks, or crypto, where a whole new generation. I was reading a story of 19-year-olds that were buying JPEGs that are now bought like a NFTs. $2.5 million penthouse. So it's, so all to your point, it speaks to our time to rent these things rather than to, buy and hold and forget about it. And you kind of see that with value investing too, which has gone out of fashion a little bit. So now, so you like uranium, you like copper. What about the battery metals? Where are we there? I mean, you're and nickel.
Yeah, the battery metals. Of course, I like nickel. How can you not like nickel? It's an interesting thing because once again, it comes back to momentum, and you can't get a stock going unless you have fast money enter that stock. And one of the narratives that's been successfully delivered by Elon Musk is, don't worry, we're going to have LFP batteries. We're going to have less cobalt in our batteries. And so what he in particular has successfully done, and there's others too, but he's convinced investors that we don't need to worry about nickel, and we certainly don't need to worry about cobalt, and there's going to be enough lithium. And so investors have largely not come in being concerned about where is that material going to come from down the road. And I think the problem with that narrative is that if in actual fact the adoption of electric vehicles kind of happens like it's trending, then you will have a real problem. Take nickel, it costs billions of dollars to build a nickel mine, and maybe you can build in Indonesia, but go ask the folks at Goro how that's gone for them. Is that $7-8 billion? $4 billion over. You can kind of go down the list of all these problems, and so I think that's a real challenge on the supply side for these miners and explorers and developers. They're not probably, for the most part, lithium is a little bit of an exception right now. They're not getting the capital to move these projects along. And what that I think ultimately means is you do have a crunch. And the other thing too that we have to kind of consider, I guess, when we're talking about all these is, today, if you're a retail investor, you've got your TD Ameritrade account, you've got your Interactive Broker account, you can basically buy a stock most places in the world. And so, if you're a fill in the blank cobalt miner and gold miner, you're not really just competing with other gold miners. You're actually competing with Facebook and Google and NFTs and crypto and every other thing. And I think sometimes we forget that. Fine, if you need to own gold because you are mandated to own gold, guess what? You already own the gold companies or base metals. But it's really about attracting that incremental investor who doesn't have to be here. And we're just not doing that. And so, kind of going in a circle here, but specifically for battery metals, Elon's convinced everyone that we don't have to worry. So we're not getting that exploration. We're not getting that development, with some exception. And it just means that if it all happens the way that on the other side of his mouth, he's saying it's going to happen, there will be serious pressure on these metals at some point in the not so distant future.
And so then as far as building out these mines, and you're talking about we need a bit, we're in a bit of a renting versus kind of buy and hold sort of environment. Does that cause a problem structurally from if you're trying to build a mine and you're a junior and you have investors that are kind of coming and going and your stock is going up and down with whatever news cycle? Does that sort of hint, does our sort of system work against us in that sort of scenario?
Well, there's no question, and this is going to segue in interesting. So there's no question. I was having dinner in London this week. There was 121 and RBC and whatever conferences. So there's a bunch of people in town. And I was having dinner with this guy, and he has a copper development project in Europe. And his capex is this is just what he told me. He's getting ready to raise for the build, right? And his capex is 400 million. His equity checks 300 million, call it, and his market cap is 70 million, 70. Like, how can that guy raise the money? Like, he just can't. And, so it's very problematic because, historically what happened, you had retail come in and then they would take it to a certain level, and then you would have funds come in, they would take it to the next level. Then you have institutions come in, and then you would really have all the force of retail and hedge funds, and it would take these names up to, material levels where they could raise the money and start to build. So, that just hasn't happened because, as you say, everyone is in it for a good time, not a long time, right? And you also, the other part of this is you have the big institutional investors who own the BHPs and Rio Tintos, basically pounding the table, requiring them to send all the cash back. They must return their capital instead of exploring and developing. And so, it's just ironic, and I find we all know the history of that. There's huge value destruction last cycle. We get the history, but we live a modern life because of mining. Look around the room you're sitting in. Everything is either grown or mined, basically at its core, and it all sort of sets the stage. And the capital markets in the West are fundamentally different than in China. And what I find quite interesting is, it's a choice in the West. You can go buy Google, you can buy whatever Freeport, whatever you want, right? And you're going to buy Google because it's a better investment by and large most of the time over the last decade. But if you're China, the Chinese government, you take a different approach and say, what, we're going to build this mine in the Congo, in South Africa, in Indonesia, and we're going to do it, for the country or for our society or for a given industry. And so I think where this ends, or at least where we get to at some point in the not so distant future, is a situation where a lot of the best assets in the world are controlled by China. And that in particular for electric vehicles means they can fully vertically integrate that supply chain. And so they're not going to be selling you nickel or copper. They're not going to be selling you a battery. What they're ultimately going to be selling you is a fully integrated car. And that car might be called GM. There's no reason why they can't buy GM or one of these companies and then plug it in. But I think it's a very sophisticated strategy, and there's nothing wrong with it. I mean, they're doing it through the front door. It's just a fundamentally different paradigm than the West, where governments aren't by and large heavily involved, and not in the way they are in China in the terms of allocation of capital. And we're relying on the market when we got a bunch of other stuff going on in the market with tech right now, and other things are more interesting to investors.
I think that's a profound point that you bring up, that in a sense that there's nothing illegal about what they're doing, right? And it's all
No,
kind of
not at
happening
all.
right in front of everybody's eyes. And so, which leads me to kind of a question I kind of been asking for years that I still can't get a straight answer on, but maybe you can help me out. But what should we be doing? What should we be asking our policymakers here in the West to be doing? They may even be watching this right now. I mean, what should they be doing? And further, and connected with that, what should the CEOs be doing? Because I've interviewed, CEOs of a low grade nickel deposit, and it's like they didn't even want the help. And it's like, well, I kind of think take the help and build the mine. Like, we don't have time here. But what do you think?
Yeah, no, I mean, it's hard for me to tell a regulator what he or she should be doing, because that pool of capital is coming from their constituents, which are taxpayers in that given jurisdiction. And so that person is really a spokesperson, at least in the West, for the people they represent. And so the question is, do people care? And maybe they don't. Or maybe at the very least, they should be educated as to what the decision is, because the tax pool is only so big, and you have to decide, like, does that go to mining? Does it go to subsidizing tech or big oil, or does it go to housing, or whatever the 100 things are? And so I think at the very least, probably the conversation should happen, and people should kind of understand that decision. Now, we both know that election cycles being what they are, you really can't have a rational conversation. And that's probably why I don't anticipate in any material way governments coming in. Now I say that, but what I will also say is that the US has a history, and China today as well, of having strategic stockpiles. So at certain times, the US, for instance, had a massive cobalt stockpile, and then it sold it off maybe 10 years ago, as well as other materials. So the US government has bought materials. It's taken that approach, and maybe that's an easier approach. Maybe it's more expensive, but maybe it's just easier to stockpile. So, it's not without precedent. Now, I believe a lot of the strategic stockpile was around war materials, missiles and jet planes and that kind of stuff. But even today, China has one of the largest stockpiles of cobalt in the world, but not just cobalt, a bunch of different metals. I'm not really aware of what the Canadian government has done. So that might be a more practical approach for a government, but ultimately they're spending taxpayer dollars, and so taxpayers have to care. And if taxpayers don't care, then the politicians aren't going to care.
Interesting. It's almost like a communications problem.
Yeah.
Like it's like there's just
look, if history is if history is a guide, everyone's going to care about 15 minutes after it's too late. You know what I mean?
Right.
Like,
that's totally it. Right. Like it's like, oh, we see, but it's not my job.
The time to be long, right? Because all of a sudden, all these development, all these development projects like Dumont and Canada Nickel and Turnagain at Giga, like all of a sudden, if they're not built, those things go up 20x on some given Wednesday, but I think that's how it plays out unless something changes, and it's not really foreseeable how that's going to change.
Interesting. And, you also think about, like, as far as, just the obvious stuff. We have all this, talk of Taiwan and everything. And it's like, okay, yeah, the US and Australia are going to come to defend Taiwan. And then the rare earths, I guess we have a stockpile, so I guess we have a stockpile, but did we forget about that? So maybe I'm sure they're thinking about it. I'm sure the Department of Defense is thinking about that, but all to say, it's just, it's something that you would hope it would come to top of mind at some point. And I would like to say, look at First Cobalt. We saw the federal government gave, I think, $5 million in a loan that I think that no interest loan, and then the Ontario government gave them $5 million in a forgivable loan or something like this. So I think I would actually like to give them a little bit of credit. I do see some.
Trent has done a great job. Trent's done a great job of making that happen. And I'm not an investor, but I'm sure the shareholders do well if he executes his strategy. But that will not, I don't know. Do you happen to know what the production is offhand? Like, it'll be a drop in the bucket compared to what Canada and the US are going to need. So, like, if you're an investor, that probably works out great for you. Like, I don't follow the story, but he's done a great job. But that's just kind of one little aspect of a much bigger project. And actually, it's kind of why it would be ideal if a few of these large nickel deposits got developed in Canada, because, you know, in a lot of those deposits, roughly speaking, the nickel to cobalt ratio is 10-1, which is kind of where these batteries are going to go to. The NMC batteries are ultimately going to arrive at about that ratio. So, you know, that would be ideal. I don't see that's happening. You know, Goldman's been running a process for Waterton on Dumont now for months. And, you know, I've probably heard whatever you've heard, which is it's not sold. So, you know, I don't know why that is, but, you know, no one's making the big move as far as I can see. And so, you know, time will tell.
Good. And I see Anthony. Anthony, how are we doing for time?
We are running up against the clock, which I hate to say because this is such a great conversation. You guys are covering all the big themes there. We did have Trent on a little bit earlier today, Anthony, and he echoes your comments in the sense that it is what they are trying to do. There's a need for it, but it is a drop in the bucket. There's no doubt about that. We do have a question from the audience here from Nicholas. Nicholas asks, in terms of carbon pricing, is nature the next asset class? Can investment into carbon credits help the environment and create wealth?
Yeah, like in my view, the most exciting asset class in the world are carbon credits at the moment. This is just amazing. You know, you're basically, and it's a very nuanced, we should probably have some longer conversation about carbon credits, but I think he's referring to the voluntary markets. And, you know, what you're effectively able to do is through nature-based solutions, which is a type of voluntary credit, you know, by way of example, you can reforest land, and on the back of that reforestation, you can write a carbon credit and then sell that as a way for a company to offset its carbon footprint or a person. And I think this is so fascinating because, you know, every single company in the world and every single person has a carbon footprint. Just fundamentally, you do if you exist. And so that means that this market is going to be massive. It's doubled this year. It doubled over last year's doubling. And it's just extremely dynamic. And it's ultimately a bridge, right? Like we need to actually have technology which decarbonizes the various mechanical processes around the world. But as a bridge between now and 2050, it can do a tremendous amount for the environment, and it can make money for shareholders. And, you know, there's a couple companies out there that have done a great job. Obviously, Carbon Streaming was the first. It's run by a former partner of mine, Justin Cochran. And, you know, there's a few others that are bases going public. I think, you know, sometime next year, run by Josh Crom, another great project. So I think there's going to be, and those are really the two. Most of the rest of the stuff I've seen is really not interesting, but I would say those are the two that have like mature management teams. But I think that this is going to be a great place for people to make money over the next couple of years.
Excellent. Great question and great response. We also had Candace McGibbon on yesterday, who interestingly, after her success in selling INV metals to Dundee Precious Metals, she is putting some of her time into creating a carbon secondary market for carbon credits as well. So an interesting, a mining executive also seeing that potential. So interesting stuff. Listen, Adrian and Anthony, as always, a fascinating conversation. Thanks so much for joining us from both Berlin and London, respectively, making the Global Mining Symposium live up to its name. Thank you both.
Thank you very much for having us.
Thanks, Anthony.
Appreciate it.
Thanks to you both. Bye.
Bye-bye, guys.
Cheers, guys. Bye.